Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday post-election day edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. You can hear our phones are ringing off the hook here, literally. And we were up late last night watching that election, but we got through it. We made it through to the other side. The market was crazy. We're going to talk about the market's reaction last night. We know you're watching it. We're watching it as well. And this morning is pretty interesting in seeing what's up and what's down. We do have two guests on today also. At 8:15, we're going to be chatting with Aaron Boowki. He is CEO of the Marco Polo Pure Asset Management Fund. And he's a China market expert, so I want to get his thoughts on the Chinese market and also how that may be affected after last night's results. Also going to be chatting with Ross Cameron. He's the owner of Warrior Trading. They're a day trading education firm. Joel, how are we doing the S&Ps?
Well, Spencer, it all depends. We've had a little bit of a range overnight. We got down to 28.50, limit down. We'll discuss that with Dennis in a second here. Now we're coming back. It's really like nothing ever happened, Spencer. Like no election. We're down 20 handles. Keeping an eye on the close, 21.35.50, and that will be the number that I'll be keeping an eye on for the next 4 years. Crude up a dime, got down to $43, a new low for the move, and rebounded. So crude, a wild wide at crude. Gold and silver, a little flight to quality, but who knows, the way everything's reversing today could be red by the end of the day. But Dennis has been observing the action. I hope your fingers are not bleeding from using them so much on the keyboard.
I didn't get any sleep last night, so basically, excuse me, if I sound tired, because I am. I really didn't go to bed. I went to bed for an hour. So I've obviously watched the futures action, got up to trade the stocks open at 4, which is absolutely crazy there too. And I can tell you that there is some major separation here right now in different sectors. So not all the stocks going the same direction. If you want to know what started getting bid first, obviously the defense stocks were getting bid. But what really started getting bid hard right around 4 a.m. were the drug stocks. And if you go through and you start looking at the drug stocks here now, look at the IBB. It's trading up 5% here in the pre-market. Look at individual components even. The big pharma is up. Pfizer trading up 5.6%. Merck trading up 2.55%. We got Eli Lilly trading up 3%. Then you go into the biotechs. Biogen's up 3.5%. Amgen, Bristol Myers, whatever drug you want to bring up, they are trading up significantly here in the pre-market. And I think, the main reason for that is we know if Hillary got in, that was on her one of the main things on her agenda was to look into drug pricing and to possibly, pursue some more pricing caps. Trump has so many other things on his agenda that I don't even think he has time to worry about pricing caps right now on the drug companies. And so the drugs companies are going to get maybe a little bit of a easy ride here for a little bit there. And I think that's why you're seeing such a substantial rally in the drugs here this morning.
Right, and those stocks were beaten up going into it. Some of these stocks we had talked about with decent yields and a little bit of protection there. Take a look at them each individually. I mean, you have Pfizer trading up here, up 31.90. I think on a day like this, you could really put some significance on the pre-market highs and lows because, reference points. I mean, Pfizer's getting back all the losses from the last 7 or 8 sessions. But Dennis, let's just backtrack a little bit, talk about what brought us off the bottom there, and it was limit down. Basically, anybody that had hedges on any way whatsoever, when the SPOOs got down 5%, limit down, boom. They had to lock in some profits, and I think that was probably the biggest motivating factor was, just taking some of those hedges off.
It was deja vu. We saw it at Brexit too. We touched limit down at Brexit, and that was the bottom. And we got down. And if you want to know what, overnight, so overnight the S&P futures limit down is 5%. They don't allow it to go lower. So it continues to trade. It just can't trade lower than that. So for about a half an hour, they're heavy offered. They're down 5%, and but it can't go down because it's limit down, and it can't go down until the open. So, I think a lot of people just maybe get bored and you're sitting there. It's not trading at all. Well, it's trading, but it can't trade lower, so it's trading at that price. And then eventually some buyers came in. I think, the Trump speech actually brought buyers into the market because they're always worried what he's going to say. The speech was very good. And Spencer, do you have a little bit of the summaries there? Because I read the speech and I didn't watch it live, but I did read the transcript here this morning. And he did a really nice job here with the speech. And I think that helped, to get some confidence back into this market. What was said in the speech you think that really boosted the market, Spencer?
Yeah, I mean, excuse me, I didn't watch it live either. I watched it when I woke up this morning. But I mean, I too was impressed by his speech. He was just very, very calm.
Yes.
Took more than a moment to congratulate Hillary. Got some cheers from the crowd on that. Kind of lingered there for a minute. And didn't say anything dumb. Really, is the biggest thing.
Yeah.
He didn't say anything stupid. He talked about we're gonna fix our infrastructure and our bridges and our highways and our airports and tunnels and schools and our economic plan and but he didn't say anything dumb, which to me was like, hey, look at that, all right, so. I agree with you. I mean, I thought it was a fine speech. It did a little bit to assuage my concerns, but yeah, I mean that was definitely a surprise for me.
All right, let's
I mean,
go ahead, Dennis. I'm sorry.
I was going to say, there's a lot of people scared here this morning, and they're going to rein him in, though. Like, they're not just going to let him just shoot off his mouth everywhere, and, they're going to polish him. And I think, at the end of the day here, obviously, the people have spoken, and they want to change. Didn't trust the politicians here anymore. And, Trump is the definition of change. Is a completely different person in the White House here now. So, and I think he's going to push for some changes here. And, and I don't know if it's, a lot of things that he's promised is going to be very difficult to fulfill those promises here. But the people want to change and they got it.
They did, and let's just go in. Let's just talk. We only got a few minutes here before we got our first guest to come on to talk a little bit of China. Let's just go into some of these individual sectors and just get a view of what people are thinking and how to approach them moving forward.
Okay, so we talked the drugs. We're telling you, obviously, that sector is very strong here this morning. One of your leaders. A surprise for me here is the financials. The banks are really catching a bit, and they probably are thinking less regulation because Trump is all about capitalism. And if you get less regulation in those banks, they can make more money. And if you're looking here, Bank America is up 2% here this morning. This is a day, on a day that the S&P futures at one point in time we're down 107 handles. We're only down 26 or 27 here now, but Bank America is in the green. JP Morgan, which actually got downgraded here today, is in the green. Citigroup is in the green. Wells Fargo, Morgan Stanley, Goldman Sachs are all trading in the green. The XLF is up 1.5% here. Financials very strong, and that was surprising.
Yeah, Dennis, you were talking about them as there was some big size in there at some of the levels in here, but right now, I mean, they're just ripping. Pre-market high in the XLF is 20.36. Let's just take a look at that on the daily chart, and let's see where that puts us. Oh boy, we did have a lot of resistance here at 20, so could be a massive breakout here. You talk about a couple things. You talk about lower taxes here, money being spent in the U.S. infrastructure. I mean, those things could turn out to be very good for the overall economy.
And just looking here at other sectors that are just on my screen and that are green here, some of your food stocks are trading higher, but there's also, I'm looking U.S. Steel. U.S. Steel is up 10% here this morning, actually 9.5% here now, trading up $2. And I mean, If he's gonna eventually look into building a wall or doing anything, or more infrastructure, it's gonna benefit companies here like U.S. Steel. And if you're looking, home, it's U.S. right in the name, United States Steel, and he's all about bringing jobs back here. So U.S. Steel up 9.5% this morning, Joel.
Right, let's take a look at that. If you're trading the issue, also you have to think about the tariffs, the Chinese tariffs, those things which could be changed here. Big move in U.S. Steel, 23.49. That is your pre-market high. You backed off there. That's a big windfall for the issue. You did have a little bit of a move. This was back earlier in the year. This thing did trade up to 27.35. That was in August. But for right now, the focus is on the pre-market high at 23 and change. What I give you? 23.49, just ahead of 23.50.
The other steel stocks up as well. Nucor, one of the biggest in the industry. NUE, Steel Dynamics, AKS, all trading significantly higher. AKS up almost 10% on the Trump victory. You're looking at stocks like Freeport-McMoRan, FCX trading up almost 5% here in the pre-market. Alcoa is catching a bid. It's up a couple of percent in the pre-market here. So it's, very interesting how much separation we have here. And we've talked about the winners quite a bit here. And, there is a lot of winners because, a lot of stocks come way back from their lows where they were trading this morning here. But there are some losers here too. And I wonder the solar stocks, because he's all about capitalism and these government subsidies to these solar companies here. I think that's something that would probably be in danger under a Trump presidency. And here you are, First Solar is down 7.5% here this morning. Solar City is down 5% here this morning. Some of the other solar stocks. Tesla, which is trying to become a solar company, I guess they do. It's down 2.5% here this morning. So you're seeing some separation. Definitely some stocks very weak and some stocks very strong.
And
you know what else too? I was just looking at too, is the merger stocks, because remember he said publicly that he would not allow Time Warner and AT&T to merge. AT&T trading up this morning. Time Warner is down 3% here. So market's scared, risk arb scared that maybe Trump gets in there and tries to block this merger. So you got TWX trading down 3% and Time Warner obviously trading, or AT&T trading up, because it would be good for AT&T, because then they're not ponying up all that money for Time Warner. So that's why shareholders of AT&T are applauding that. Just looking here also, DuPont Dow.
Can I say Twitter, maybe? I mean, our new president loves Twitter.
It's trading flat right now, so he does tweet a lot. Man, maybe there's something to think about there.
Let's cover a few other things here. Let's cover Mexican stocks.
Well, I want to look DuPont Dow, so we were just before, because DuPont's down 6 points here.
Oh, geez.
And this is probably on the merger too. So, well, it could be, overseas too. So there could be a number of issues, but Dow is trading down here as well. So you got a lot of different issues here. You're going to have, if you're just blindly saying, wow, the S&Ps are starting to rally and go green, I'm going to buy everything. You got to be very careful with what you're buying today, because there's going to be some stocks that are going to be very weak and some stocks that are going to be very strong. You're going to talk the Mexican ETFs, which are just absolutely annihilated. What do you got for which Mexican ETF you want to look at?
Let's go EWW here. That's getting it got slaughtered, but now it's coming back off the lows, hit 46.09. It's coming back. Most interesting chart here, Dennis. Analyze this one. Smith & Wesson went up to 30.50, came crashing back down to $26.
This is really interesting. That was 30.50 today?
Yes.
Holy cow. I missed that one all. There's so much action. It's hard to just cover everything here, but that's incredible. So Smith & Wesson, here are your gun makers, which you would think would do very well under Trump, get the huge pop, and then now they get the huge drop. So I guess maybe a lot of this, I don't know. You can't really say it was priced in because nobody knew this was happening, but that's a shocker. Look at RGR. Look at Sturm Ruger. It's down $4.
Yeah,
that just doesn't even make sense. But I mean, this market, I don't know if a lot of the market makes sense anymore, but that's incredible.
All right, Dennis, we'll let you go. Fire up the keyboard there, and
yeah, I'm gonna go trade here for a little bit. You guys got a couple good guests coming on. I'll be back with you in about 20 minutes here, or 30 minutes. But I gotta go trade. I got a billion positions here going on, so I will be back with you guys.
All right. We'll be right back with Aaron Boowki, CEO of Marco Polo Pure Asset Management.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have Aaron Boowki on the line. He is the CEO of Market Polo Pure Asset Management, based in Shanghai. Aaron, did you have a good night?
Yeah, first of all, it's Marco Polo. And it was a very interesting day here in the Shanghai stock markets. This was the second time this year that there was sort of an unsettling global event, and the Chinese stock market reacted positively. When Brexit happened, the day of the Brexit event, we were the only stock market in the world that was up. We were up about 1.5%, and then it wasn't very surprising today to see our market almost peak into the positive, while the rest of Asia was pretty bloody. So the Chinese stock market proves again and again that it beats to its own drum. That's for sure.
Right, so you did have, the immediate sell-off, and it's coming back here nicely. Well, along with the futures markets here. So discuss, like the implications. I mean, you have, short sellers in the market that might have been looking for doom and gloom on this, and when they, it looked like it was there and they didn't get it. You think you got some short covering here, or what do you think the factors are behind the rally in the Chinese stock market?
I think that the Chinese stock market, it's basically oversold. Every time we've seen bad news, we're not seeing really any downward pressure. It's been leveled up for about 6 months straight on very low volatility, just building a nice steady base at about 3,000 points. And for those of your listeners who don't really know a bit, just a little bit of background about the Shanghai and sort of where we've come. Right now, we're the second largest stock market in the world. We've displaced the Nikkei and the London to take the number 2 spot. And we had a significant crash over the last year leading into January of this year. We peaked at 5,200. We're now at 3,000. So our market it's down significantly. It's built a nice base the last 5 months or so. It's definitely looking for a breakout. That's pretty obvious every time we've had bad news. Like I mentioned, Brexit this morning was a shaky market in Asia, and we were performing well. We were denied inclusion into the MSCI index over the summer, which was significantly bad news for the market, and we were up 1.5% that day. So it just seems like there's just no sellers in the Chinese market right now.
Hey, Aaron, can you speak a little bit about Chinese monetary policy and how they're spreading their currency around the world?
That's a great question. First of all, Chinese monetary policy is at a very interesting stage relative to the United States, Europe, and Japan. Over the past 6 years or so, as you and your listeners know well, the rest of the developed major markets were at all-time historical low rates. But for the past 6 years, the Chinese, the PBOC was holding rates at the all-time highest rate ever. So we were at a benchmark of 6 the last 5 years prior to this cycle that we're in now. And I mean, mortgages were 11-12%. Just in the past 18 months or so, we've had about 5 rate cuts. So we're at the opposite end of the monetary curve from the United States. As you guys are looking at hikes, we're now headlong into our cut cycle. So it's an interesting paradox between the largest economy in the world and the second largest being at completely opposite ends of the monetary curve. It's something interesting to watch, that's for sure. As far as the renminbi that you mentioned, I mean, China has aspirations to see the renminbi become a global currency. Steps are well underway to see that happen. I don't think there's any doubt at this point, after the IMF's inclusion and many other events that we've seen over the course of the last several years, that the renminbi it's going to become the second most important currency in the world.
What about the Trans-Pacific Partnership and the fiber cabling and how do you see that all affecting Asia and China specifically?
I mean, China historically, it's been a very insular economy. They are the country that built the Great Wall. Generally speaking, external economic forces, imports and exports have been a much smaller part of the Chinese economy compared to other economies around the world historically. And that's true today. I mean, all types of trade and all sorts of capital flow interaction is a very small part of what goes on over here. Exports now make up, a single-digit portion of the economy. It's become, external forces have just become a moot point over here these days. So, I mean, spending any conversation on partnerships is probably a way.
You and I spoke on the phone last week, and we were talking a lot about just sort of awareness of and education about what is going on over there, and how not many people really know. Google, Facebook, News Corp are all kicked out of China, so there's not a whole lot in the way of communication between what goes on over there and what we think over here. And what's kind of your thought on that, and how there isn't a whole lot of knowledge, it seems to be, at least from my point of view, from our end, about what goes on over there.
Well, our clients are broad-based across Europe and North America, primarily those two areas. And, the feedback that we constantly get from them is such a contrast to what we actually see on the ground and what we read and hear from the government and what we're seeing anecdotally and what we're hearing from the companies and their officers and what we're seeing in the actual data. It does appear that, Western media outlets have just sort of fallen into this trend of, screaming the sky is falling in China. And anyone who's followed the China story over the past decade will know. I mean, we had the whole Chanos, the sky's going to fall in China, real estate's going to collapse. That was 8 years ago, and had you invested in Chinese real estate over the past 8 years, it probably would have outperformed every asset in the world. Everything you see, and we get feedback from the West, it's just so off base. It does begin to smack of Western media outlets just printing the sky is falling, and it creates a lot of clicks. And, to say things are running smooth over here doesn't really generate a lot of interest in the media. So and the fact that people know so little about what's going on over here, they're very sensitive to those sorts of media stories. So they do draw a lot of attention. One very good example that probably yourselves and a lot of your listeners have come across is the Chinese ghost cities story. Have you read about that, or?
Of course.
Have you guys heard about that? Okay,
yeah. Tell us about that.
It's a good example of that story. So, China in the last 15 years developed about 70 new major urban developments. I mean, they had to shift. We've already shifted 300 million people from agrarian lives into urbanization. It's just a huge trend, and trying to build up the infrastructure in cities to take in. I mean, we still have 700 million people living on farms. So, I mean, there's just a massive need to build urban infrastructure. And, during the last infrastructure cycle, city building was, at the top of the list. And it's one of the main reasons why oil and every commodity in the world saw a super cycle in the last cycle, because of China's need to do that. And, out of the 70 or so cities that they developed, there were a few failures, namely two notable failures. Two cities out of 70 that were built and for two very different reasons failed. And if you watch or read the media around that, you would think that the whole country is a failure and everything is a ghost town. When in reality, when you urbanize 300 million people in a decade, and you build 70 cities which don't even have enough housing currently, generally, to take in all of the demand. That's why prices are so resilient here. A few mistakes or failed projects or shrinkage it's more than acceptable, and it barely dented anything in terms of the financial gains that have been made through the development of the country. So you just don't see the other side of the story. You just see anything that journalists can get their hands on to scare people, they tend to do so. Meanwhile, I mean, if you just zoom out, we have an economy in China right now where we're essentially at full employment. The number one thing we hear is it's hard to get employees. Wages, incomes are going up double digits every year for 10 years. Inflation is under 2%. Full employment, near zero inflation, with incomes going up 10%. And house prices are up about 30% over the last 2 years. So you have about 200 million homeowners whose main store of wealth has gone up 30%. I mean, if you just look at that, anyone who can understand basic economics would understand that it doesn't get better than what we're in right now.
Hey, Aaron,
over here.
Aaron, I got a question from the chat, and then I want to ask you about your fund. Question is China finally moving from I'm sorry, let me find the question. There we go. From an export to a consumer-driven economy?
Yeah, I mean, there's no question about that. The general story was, and this has been true for a lot of emerging market economies who wish that they could become developed economies. The general strategy is to credit fuel an infrastructure boom, which will hopefully unleash a developed economy when you're completed. And a lot of countries fail. I mean, we saw Thailand out here fail. We saw Argentina fail years ago. There's been various bids by emerging economies to try to make it as a developed economy and not cross the finish line. I think there's no doubt at this point that China's way beyond that finish line. We are now the youngest developed nation on earth here. And, you have an economy where exports have become irrelevant. I mean, Guangdong, which is the region where most of the exports were being made, I mean, the factories they're almost all closed in cities like Dongguan. That story it's gone to the wayside. Those jobs are going to be moving to Vietnam, Indonesia, and India, which have more than enough labor. Over here, those workers have left those jobs and they're moving to the cities and reinventing themselves as, lawyers, stockbrokers, yoga instructors, programmers. I mean, it's becoming, I would say it already has become a serviced economy. When we started our fund about 13 years ago, services made up less than 20% of the economy, and now services are about 55% of the economy. So the big shift here to become, and if you look at developed economies, no one is doing anything other than services. You guys are in services. Everybody listening to this is in services. Your yoga instructors in services, your interior designer, no one actually does labor. I mean, I would dare to say that no one listening here is a farmer or a line worker. These service economies, the United States is over 70% services and consumption. China's stats are beginning to look like a normal developed economy at this point. And, it's exciting. And there's a long way to go. If you look at all the service-based economies in the world, their GDP per capita range from 25,000 to 60,000. In China, we're still only at 8,000. I mean, you look at Korea, Japan, Taiwan, Hong Kong, Singapore, they're all doing 20 to 60,000 GDP per capita. And here's China with a brand new infrastructure. Everyone's running around with iPhones, and they're doing 8. So, I think the growth story for the next 10 years is well in place. And having an infrastructure as new and significant as China's is going to make them very resilient. I mean, you can have all the crises you want, but it's not going to rip out the biggest highway builds ever done by any country ever.
Aaron, sorry to interrupt. Before we let you go, I just want to ask you about your fund. You've been in exclusively in China for 15 years now. Your fund, I think you told me, was the first ever to enter the Shanghai market with foreign money. Tell us a little bit about Marco Polo.
Yeah, we launched our fund the year that the Shanghai stock market open to foreign investors, which was in 2003. And we were part at that time of a pilot government program. And we were the first fund and shop designed to offer access to the Shanghai market to foreigners for the first time. And so as such, we have now the longest track record as a fund and a team of anybody in the world in the second largest stock market. When we launched, the Shanghai stock market was probably, 30th or 40th largest market in the world. So it was a pretty small story. So, our position as a team specializing in the Shanghai has dramatically changed in terms of the value that we have to offer. I mean, at this point, it's hard to say that any other market in the world is the next best thing to own outside of the U.S. stock market. I mean, would you really say that if you were going to diversify outside of the United States in equities that you'd rather be in Tokyo or London rather than the Shanghai. I mean, I think it's becoming pretty clear now that our market is the second best choice. Our fund has the longest track record. Our performance is, well over double the index. The way we operate the fund, it's pretty straightforward. We're trading in listed equities in the Shanghai and Shenzhen market, and it's exciting stuff. And if any of your listeners ever venture out here, look us up. It's Marco Polo, and we're in Hong Kong, not Shanghai, but Hong Kong is really the place to be in Asia when you're in finance. And if any of your listeners ever want to reach out, our door is always open, especially to the type of people who would be listening to the show.
He's been, he is, I should say, Aaron Boowki, CEO of Marco Polo Pure Asset Management. He's been kind enough to join us this morning, despite the time difference. Aaron, thank you so much for coming on. We really appreciate it, and we will definitely talk to you again soon.
No worries. Thank you. Thanks
All
for your time. Okay.
8:36 now. We're going to take a quick break. We're going to grab our next guest. He is Ross Cameron. He's the owner of Warrior Trading. It's a day trading education firm. So we'll be talking some technicals and charts with Ross.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanan, along with Dennis Dick and Spencer Israel, and we have Ross Cameron on the line. He's the owner of Warrior Trading and a day trading educator. We need some of that today, Ross. How you doing?
Yeah, good, thanks. How are you?
Good. Just give us a little bit about your background. I see you worked here at an architecture and product design firm, and then you saw your money go down the tubes in the late 2000s, and you said, hey, I better get into this. Give us a little bit of that background.
Yeah, I mean, that's exactly right. For me, I wanted to get away from that 9-to-5 grind and move back to Vermont. I'd been living in New York City, but I just didn't see that as being really sustainable long term. So I moved back to Vermont, but of course I realized that, working as a designer or an architecture in a rural area, it's just not even really a job that you can find. And I started looking into trading the markets, taking control of my own finances. And, for me, it ended up taking about 18 months before I found any success as a trader. And that was a very frustrating experience. And I think that's what a lot of beginner traders go through, that trial and error. You try one strategy, you try one set of technical indicators, and you just kind of jump from one to the next. A lot of traders, it's kind of like learning to ride a bike. They don't even end up making it through that learning curve, right? So they end up, dropping out of the market before they find any success. But for me, one of the things I found that worked really well was focusing on that small handful of stocks each day that have the potential to make a big move. So, like on a day like today, we've got a lot of stocks that are certainly moving to the upside and the downside. So like every single day starts with me looking at those top gainers, top losers, because I know those are the ones that have the potential to have those big intraday swings, the volatility. And as a day trader, that's what I'm hunting for, right? Those are the opportunities I'm looking for.
Let's talk about when you first got started here, and you said 18 months, kind of struggling there. Were you still trading real capital at that time? Did you go back
Yeah.
and forth between? Okay, so you did. So you just tried to trade small and limit your losses, because a lot of people will tell you, paper trading, and if you're getting started, and boy, it's a little bit different when you have your own skin in the game.
Right. Yeah, 100%. And that's what I say also to all of our students. You start in a simulator. That's the smart thing to do. But for me, when I started, I didn't know that, and I just kind of jumped in with real money. And that was, the hard part about that was, of course, I started experiencing real losses right away, and then it kind of felt like, geez, I've already got $10,000 in losses into this thing. I really need to see it through. And I think that maybe motivated me a little bit more, that I had to kind of recoup those losses. But, a lot of traders that take that approach, they don't recoup those losses. They just get bigger and bigger until they finally, are out of the market. And that's the frustrating thing. And, that's the reason that I opened Warrior Trading, really to be a hub where, either beginner or even intermediate traders could come together and exchange ideas, talk strategy, and get a sense of what works and what doesn't work.
All right, so let's get down. You like to break down momentum stocks with daily chart analysis. Do you go any farther out in the daily chart? So take us out a little bit longer term to see if you look at anything, and then let's move into some intraday chart setups and what we're looking at when we're looking at your screen as far as time frames and what indicators you're using.
Right, totally. So, I look at the daily chart, and for me, I always like to look at the big picture. So, when I look at the daily chart, I'm usually looking like 6 months out, and sometimes I'll go back further than that. But one of the things I look for is this stock a former runner? Is this a stock that's made a big move in the past? Has it had a 20-30% intraday move, or even one of those stocks that makes like a 50 or 100% intraday move? Because those stocks, history repeats itself. So if they have a catalyst again in the future, there's always the chance they could have another one of those big days. So I kind of go through my list. Like each morning when I'm looking at the top gainers, I'm looking at the daily chart, and I have my moving averages on there, and that's about it. I have volume, candlesticks, and then my moving averages. So I use the 9, the 20, the 50, and the 200. And that for me gives me a pretty good sense of, where the stock is, what the big picture looks like. And then from there, I can jump into looking at intraday charts. But generally speaking, if a stock is below its moving averages, I'm not going to have a long bias on it for a day trade. I really prefer to day trade stocks that are above the 20 and above the 50 moving average. Below the 200, is maybe okay if it's kind of like, been oversold for a long time and it's kind of bouncing back up.
All right, so you like familiar chart patterns. You can enter and exit trades. Me and Dennis are kind of like daily high and low guys. We don't, are not looking much more sophisticated than that. What techniques are you using to enter and exit your trades ahead of the crowds?
Well, for me, what I look at, I've got my high-a-day scanners. So I'm watching stocks that are hitting new highs intraday. And what I look for are stocks that are, sort of have that criteria of having what I think is like, big potential. So, I categorize for float under 100 million shares, knowing those stocks usually move faster than the thickly traded stocks. And then, I like to see that we've got super high relative volume, that this stock might be having higher relative volume than it's had any time in the last 6 months. What that tells me is that there are other retail traders, day traders like myself, that are interested in this stock. Now, at that point, I've got to go check and see, why are they interested? Is there a catalyst? So, I go on Benzinga, I check the news, I search to try to figure out what that is. And then I very simply wait for the first pullback. Now, sometimes I will jump in stocks that are surging, but generally I wait for the first pullback on the 5-minute chart. So your standard bull flag, your standard 5-minute, pullback to the 9 moving average. I mean, those for me are low risk opportunities to get into strong stocks. And you see those patterns again and again and again. Once you recognize them, it's like, I say it's kind of like, looking at a Magic Eye poster. Like a lot of beginner traders, they don't see anything. It's just like, it's all blurry. And then your lens, you kind of start to focus, and now you can see the picture. You can see the pattern. And once you see them, you see them on charts all day long.
All right, before we get into some issues there on the long and the short side here, you have like to discuss the importance of reading level 2 in the time and sales window as it pertains to momentum stocks.
Yeah. For me, I know a lot of traders will trade without level 2. And if you're an investor, or you're kind of a swing trader, you may not need level 2. If you're trading from your iPhone, you probably don't even have level 2. But, for day traders, level 2 is important. I mean, it can kind of give you an indicator of what's about to happen before it happens. So if you're waiting for that candle to form, well, there may have been some type of early indicator on the level 2. For instance, maybe we'll see like a 50,000 share bid right before the breakout point, or maybe we'll start to see lots of buying going through on the time and sales, and that's indicative of other retail traders like myself seeing an opportunity. So, it's kind of like if you're trying to, drive with one eye closed, like you can do it, but you're going to have such a better advantage if you just open both your eyes. And that to me is like level 2 in time and sales. Yeah, you can trade without it, but if you're an active trader, a real day trader, those are tools that are going to help you, improve your trading.
All right, now we got you on a really tough day here, Ross. And,
Yeah.
Things are flying around. But why don't you give us maybe 2 or 3 issues that you're looking at on the long side, and maybe 2 or 3 issues you're looking at on the down for short.
Well, for me, like I'm not big into doing like after hours watch lists. Like I just don't do that. So like, I'll do it pre-market, but like in the evenings, I don't really put together a watch list. For me, it's always based on, what's moving in the morning. So, this morning I open up my scanners, I look at the leading gappers, to the upside and the downside. But, I always have to kind of have my mind on, what's the overall context? What's the big picture look like? So, for a day trader, this is one of those days where, there will be opportunities, but it may be safer for beginner traders, especially, to sit on the sidelines, let things kind of settle out, wait for good setups, because there's going to be so much volatility and it may not be in the most kind of predictable form. So, right now, as I look through the scanners, I don't see a lot of stocks that are really my go-to setup. And that means basically that there's a stock that has, I think, the potential to be, showing news that's like a once in a year type of event, like really good earnings, really good contract, some FDA approval, something like that. And that the stock is going to be kind of like the top choice among all retail traders. So you sort of have to think about that, like collective trader mentality. What are all traders going to be looking at? If we're all looking at Hertz like yesterday, or we're all looking at VRX like yesterday, then those ones become obvious stocks to trade. The patterns as they form, thousands and thousands of traders are watching them, so they're more likely to resolve in the right direction. But, on a day like today, when you've got so many different stocks moving, I think the safest thing will probably be sort of to sit back and wait to see where we get maybe clear direction on 1 or 2 names.
Did you trade Hertz yesterday? Because that was a wild child.
Yeah, I didn't. I was watching it. My concern with that, I'm always a little hesitant to trade the gap down stocks to the upside, because I always feel like, they have that kind of selling pressure from people who are just so buried from the day before. And I was so impressed with the way that surged through, and as I look at that chart on the 5-minute, the spot that really had my eye was at 11 a.m. Right at 10:45, we broke over the 9 exponential moving average. We tested it at 10:30, couldn't break it. We finally broke over it at 10:45, and then right at 11, we kind of broke through that level, and that was sort of showing that we broke over the 9. We came back, we retested it, it held as support, and from there, it was off to the races. But for traders who use like high-a-day scanners, well, this didn't actually hit new highs until it was over 2150, which was at 1140. So it had already run 3.5 points from that 9 moving average. And then at that point, it just kind of felt like a chase, even though it kept running another 3 points.
We've been on the line with Ross Cameron. He's the owner of Warrior Trading and a day trading educator. Thanks for coming on, Ross. Have a good day. We'll speak to you again soon.
All right. Thanks for having me.
All right, 8:49 here. Dennis is licking his chops here on some issues here. Dennis, how you doing?
Trading. There is a lot of volatility. I've been trading a lot of the banks. The banks' volatility is absolutely incredible. Bank America's one was trading down like 16.50, 16.40. It's now up at 17.33. I got to tell you, there's some levels here. So here you got a breakout. Looks great on the chart, but 17.50. That's a big level. I don't know. There's so much volume though. I think it's 7.9 million shares have traded Bank America already. Just absolutely incredible range here. Morgan Stanley trading up here at 34.38. That's a new 52-week high for Morgan Stanley as well. Think about 34.50 and then 35. I would think about if I'm talking levels on those ones. Citigroup here is trading a little bit weaker, and it's the only one that actually has not really rallied with the other ones. And I'm not sure. Maybe there's something else happening there. Maybe it's domestic operations versus foreign operations. I'm not sure. But Citigroup actually is trading in the red just slightly here, so not quite as strong as some of the other ones. But man, I tell you, the financials have had some good moves. The drugs have just been crazy. Look at Pfizer. You got to see this Pfizer chart. It is up right now. Bring it up. PFE up 8.5%. It was up 10%. It was up to $33. It just
Did you
pulled
get
back.
something there at 33?
You know what I did? I actually just missed it because I just noticed it. And I threw it out there at 32.99. It traded some 33s just ahead of me, and then I could have hit 32.90. I was like, it's trading active enough. I thought I'd get the 99. I never got it. So you missed the trade for 9 cents. Things down 50 cents now. So in this market, don't miss a trade to save a nickel here. Just don't miss a trade because the stocks, just when they start going in one direction, they're really moving. A lot of volatility, and that's an execution tactic that you should be aware of. A lot of us are used to these quiet markets, and you can try to milk. You can try to save a penny here or two or a few cents here or there when the market's quiet. But when it's moving around, don't miss the trade. Because this thing's moving 3 points here today. Here, you're trying to save a nickel, and you end up missing out on 50 cents here at least. So, Pfizer has been hit. So a lot of separation here. Again,
Dennis, real quickly, did you forget Bob Bright's number 1 and number 2 rule?
What are those?
When stocks are going down, they don't lift offers. And when they're going,
it was going up still at the time.
It was okay. And this other
I
thing,
thought it was anyway.
Yeah, yep. And then when they're going up, how often do you get hit on a bid, right? They're lifting offers, so that's just a little market tactics.
Take liquidity. You're right. When the momentum's on your side, just if you're looking at it and the setup is there, just don't try to save a few cents. That's the moral of the story, or a nickel trying to make the trade, because there's big money out here today. Big money to be made, big money to be lost. So be careful too as well. Our last guest was just warning obviously these markets. If you're newer to the markets, you might want to stay on the sidelines for the first 20 minutes, half an hour, because there's going to be some crazy ranges here today. Just looking at other sectors, what's getting hit here too? We haven't talked about it. A couple people in the chat were mentioning it. The TLT, the bonds are getting hit. So automatically, that makes me start thinking about defensive stocks, yield stocks getting hit here today. So looking at some of your tobacco stocks. Philip Morris is down $1.30. MO is down $1.28. RAI is down 91 cents. You can look over at your utilities. The XLU trading down almost 2% here this morning. So your Southern, your DT Energy, your Duke Energy, all of those stocks going to be significantly weaker here today. Also looking, some of your food stocks, like I was saying, some of those might be actually weaker here. So think defensive stocks right this morning here. It's looking like those are weaker. Definitely some huge separation in different sectors, though.
And let's take a look at this HCA here. I mean, this thing is just getting obliterated here. Looking at the pre-market trading action in HCA, just headed lower and lower. We got a 66.75 pre-market low. I guess if you're short this thing, it might not be a bad idea to take a look at it. You did have incredible monthly support here at the 73 and a half area. See you on that, Dennis. Is there any kind of levels you're looking at?
No. This stock, it's just, you gotta let this unfold. And you're just jumping in here trying to call the bottom. Sure, you might get it, but you might just get lucky, more than anything. Because these things, when they're moving like this, they're gonna be crazy. So you've got it. That's what I would say is you got to just let whatever happens, kind of let it unfold. I'm not trying to catch bottoms here. I'm looking for different types of setups. Like the swings and get the momentum in your favor there. But when something like this, and they're just selling everything, it's down 17%. I mean, look at Hertz yesterday. Great example. People who were trying to catch the bottom on Hertz got hurt yesterday. And I know it came back, and you can say, oh, well, it came back, but it didn't have to come back. And Hertz was trading up at $28, $27 in the pre-market, then 25, then 23. It opens way down at $22, goes all the way down to 17. You're probably getting stopped out, or probably, even a worst case scenario, you might get a margin call if you really are in the margin or something like that. And then it turns around and rallies 10 points. So, I mean, there was a swing. Some of these things do turn, but trying to catch them while they're going down is not the way, to trade this environment. Wait for it to start turning and to get the momentum on your side. Because you can really get hurt if you're just trying to catch bottoms here.
All right, we do have a couple new stocks, and boy, oh boy, not a good day to recall your drones if you're GoPro.
Although
huh?
I do,
Oh,
I,
no,
wait,
not at all.
I want to take a moment to congratulate GoPro management for what was surely the greatest news dump in the history of news dumps at 6:30 at
Sneaking it in there?
6:37 yesterday evening. They announced they're recalling their Karma drones because there's a battery issue.
Sneaking it in there.
Oh, well done all around.
Good call out on them there, Spencer. Yeah, so we're calling because these drones might fall from the sky on you if you're flying them and the batteries die on you. Anyways, GoPro getting hit hard. Down 8.8% here. This isn't good news. One of the main reasons why the stock probably was bouncing back is the potential for their drones, and this is a hit to that, at least a short-term hit. Though I will say, you do have some nice support here that you're trading at right now. 990 was the low after earnings. I think there's probably a few people who maybe got caught trying to short this thing, and if they're bringing it back in, they might bring it back in at this level. So this is one, as opposed to some of the other stocks that I'm looking at, that maybe you try, if it starts to turn and get back above $10, there might be a trade from the long side. It starts taking out like 975, 965, then I'd be nervous.
Yeah, there was that traded down to $9 in pre-market trading. Just because it opened off its low, this was the day you could see on the chart and rallied $3.50. Never know if you're going to get that exact same scenario. We did have one earnings stock. We'll cover that before we wrap up the show. And
we had a few earnings stocks. We never got to any of them there. I've already got rid of my sheet, but there was TripAdvisor, so TRIP. But looking here at another one here,
we had Wendy's. We had
Jazz Pharmaceutical. Jazz, great day for Jazz to report here, Spencer, because they disappointed, but they are buying pharmaceutical stocks no matter what. Jazz was trading down last night, down into the 99 handle, and it's come all the way back and is now trading the 110 handle here. Ooh. So good day if you're reporting disappointing pharmaceutical results, because they're just buying all the pharmaceuticals regardless of any results here today.
Yeah, let's look. I do have a level, though, that I like this, and it did break above here, the double top that you had right at the 109 area, so could be good to go. Maybe if it comes back to support here, old resistance, new support. But man, not a lot of daily highs to lean on here between 110 and 120. I see Eric Hunsader, S&P futures liquidity near all-time lows this morning. So you're going to get some whipsaw action. Just the levels I'm going to keep an eye on here for me would be mid-range on the day. That comes in at 20, 90, 50. We had a brief dip under that earlier this 6 a.m. when I was watching the futures. On the upside to fill the gap. Dennis, can you believe we're only 10.5 points away from yesterday's low? Filling the gap at 21.19, and then above that you have the close. Dennis, any special comments or tips for people? One other thing I would say is, with the kind of volatility today, if you're a normal 1,000-lot trader, maybe trade 3, 4, or 500 lots, because you're going to be able to make the same amount of money with the extra movement. That's really the only tip I have. Anything else?
You got to be careful. The other tip, Don33 was just saying, if you're being a liquidity provider, liquidity taker, Phil Chen was asking me, and Don33 was saying, can you use market orders? Definitely not. This is
No
not the
way.
environment to use market orders. You could really get some bad executions. Put a price on those limits. When I say taking liquidity, like hit the bid, I mean use, if the bid's 990, send a limit order at it at 990. Or if you want to send the limit order at 985 to sell it, because you'll probably still get the 990. It's still got to get you the best price that's available. But you send a market order and all of a sudden there's air below, you could get filled at like 960 or 950. So market orders are a no-no. I say always market orders are a no-no, but in this environment, a special no-no.
All right, Phil, thanks for all the laughs he said. Just glad to survive the election. All right, Spencer.
You and me both.
Yeah, let's preview Thursday's show.
Yep, we're still gonna be here. We got Greg Harmon on tomorrow of Dragonfly Capital Management. Yep, we'll be here tomorrow. We'll be here the rest of the day, just kind of watching these markets. It's gonna be one of the more interesting days, I think. So if you missed any part of our show today, including our interviews with Ross or Aaron, you can listen to the whole thing again. The YouTube video, unedited version, will be available as soon as we're done here. The edited podcast will be up on SoundCloud, iTunes, and Stitcher probably within the hour. And excuse me, there. Maybe I won't survive this election. Don't forget to check out Benzinga Pro. You can get a free 2-week trial today by going to pro.benzinga.com. You can also call us up 313-723-2000 if you say you're a listener of the show. You can get definitely there is a discount there on an annual subscription to Benzinga Pro. It's our real-time news platform. It was popping last night with the election going on. I was manning the desk with a few other of the Benzinga news deskers here. It was a very fun night. So yeah, that's Benzinga Pro for you. You can get our audio squawk, real-time SEC filings, and a whole lot more with that. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So we're going to leave you now for the day. Hope is Dennis or Joel president now? Great question, Phil. We're going to let you go. Hope everybody has a good rest of your day, and we'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.